All right, good morning, everybody. How are you doing? Comment allez-vous? It's a Thursday. It means we got weekly jobless claims. Some Philly Fed, I believe, too, right? Should be all good. So let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, however, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. My name is Wayne McDonell. I am the Chief FX Market Strategist for TradersWay.com. Who? I do these sessions 7:30 in the morning, Monday through Friday here at Forex.Today. My overriding goal is to make you a success because it's in our best interest. If you become a successful Forex trader, one day you'll decide to trade real money or maybe trade other people's money. And we'd like you to choose us to be your prime broker. So I'm here to earn your loyalty and your respect. So thank you very much. By the way, is the webcam working? The little thingamabob over here says it's not. But yeah, all right. You see the massive progress I have going on behind me, huh? Massive progress. Yeah. All right. So please visit TradersWay.com and open up an account today. Please. Okay? Alright, let's see. Desktop. Oh, this is in the way. Oh. Hello, hello, hello. Hello, yeah. Alright. How does that look? You got some charts? Gee whiz, hang on. All right. I might have messed your chat up a little bit, but that's how I need it to be, huh? So don't complain. All right. Is that right, Nikolai? See, I disagree with that, but whatever. I don't know why you'd want to see my face. Right? All right, so anyways, let's start with the USD yen. A little bit of yen strength, still based on hitting the monthly target. Now, this must start to sink in at some point. Right? This must sink in where this goes up and up and up, week after week after week. We hit our monthly target, double top and drop. You know what I mean? Like, that's the projected top. Lots of people don't know this, right? You didn't know this before coming here to Forex.Today, right? It's like, this is a little bit important. It went up, hit our target, and has now completely reversed. Now, I thought maybe we'd bounce here at the weekly and drop, but no, it's not even, it didn't even pay attention to the weekly, except here, the entry, right? So imagine those that shorted at the weekly M3. If you haven't gotten out yet, it's advisable to take profit. Okay? Or at the bare minimum, move your stop to about here, and just say, well, even if it comes back, I still get my S2, right? But maybe this drops to the next level. Okay, but this up here told us to predict monthly central retracement. After that, honestly, I don't know what's going to happen. So now I'm like, now I got nothing, guys. Will it go up here? I don't know. Will it fall lower? Well, I don't know. So let me tell you though, or let me remind you, we expected gold to rise and the stock market to fall. Gold was up what was it, like $40 an ounce off our bottom? And now yesterday the stock market crashed. Really? I wonder if that had to do with the VIX. I wonder if that had anything to do with the entire market being completely naked. Oh wait, we talked about that. Oh, but a week early, right? You guys remember? Talking about the VIX that told us everyone was naked. So I said, whatever creates the spook, once the herd is spooked, yep. Was it? No, it wasn't 2 weeks ago, was it? Anyways. So I don't know, it's cool, man. I'm hoping this all sticks. Oh, last Monday. Yeah, well, there you go. They don't call you Gandalf the Wizard for nothing, right? By the way, I was going to buy a set of books. I wanted to buy my kids The Hobbit and The Lord of the Rings. I thought it's time to read it to them. So I told my wife, I'm like, hey, I want to get a nice copy of these books. I want it to be special, and I'll read it to them at bedtime. She's like, yeah, that sounds really good. So I show her the set. She's like, $750. I'm like, yeah, but it's 4 books. All 4. She's like, there's no way. I'm like, what? So we're in negotiations. Sorry. Got a lot going on. You know what? I had so much going on yesterday. It's 4:30 in the afternoon. I'm firing up the barbecue to cook dinner. I'm like, gee whiz, I'm really hungry. And then it just occurred to me, I forgot to eat breakfast and lunch. I'm like, oh, well, that makes sense. Yeah, a little busy. All right. So now what? This is the one we're watching. Well, let me ask you, why are we watching this one? Mispriced. Whoa, ho, ho. All right. Would you think maybe weekly S2 could be an opportunity for a bouncy bounce? Okay. What do you think of that? Yeah. Look at the monthly, guys. What an amazing coincidence. A triple top on the 1 minute chart. at 76.76. That's an amazing coincidence. So observing this, would you assume, because we don't know for a fact, but would you assume institutional investors are using monthly pivot points and they're also watching 76.76? Yeah, there is no doubt. Yes. Right? A Klingon warrior has no doubts. Yeah. So there we go. Boy, I wonder how you, right? Right? So there's obviously bigger institutional investors, and if you're using a 1-minute chart, even if it's a 1-minute chart, wouldn't these be prices that you should pay attention to? And I would say so. So, the $1 million question is, will it fall further? And my answer to that is you should have already gotten out here. So what happens next? Well, we are playing the monthlies, but if you're using the weeklies, which you also should be in my opinion, it does not predict lower. Okay? So the conservative cautious trader, the disciplined trader should have already taken profit. And maybe if you're lucky, going back to here, they're re-entering short. But, chances are another drop is not in the cards. And it's because yesterday we talked about dairy prices going up, global dairy prices going up based on the Fonterra auctions released. Was it this Tuesday or last Tuesday? I can't even remember. But the trend in dairy prices over the last couple of weeks has been good. I think we were up, 3.1%? And yet the New Zealand dollar's falling, and that's no so good. Okay? No so good. Okay, this should be going up, or I don't like saying should. Based on historical correlations between dairy prices, because of the percentage of GDP that New Zealand has to dairy prices, one would suppose at some point, if the increase in dairy prices continues to go up, at some point that would benefit the New Zealand dollar. All right, so this might be some risk off. Now, do you guys remember looking at the Swiss franc? And the Swiss franc was telling us that risk off had already begun, but we hadn't seen it in other currency pairs yet? Right? Yeah, and all of a sudden, boom, yen is strong, stock market's down. Well, once the yen strength abates, right? And I know there's a master abater joke in there. Once it wanes, there might be an opportunity to go back into the kiwi. Now, if you go back really now a month in our conversations, the yen was weak, the yen was rising significantly. We were pulling hundreds of pips out at a time on swing trades. But I did say it's not going to last forever, because based on seasonality, it's not the right time to stay long forever. If you remember that conversation, say aye. The yen strength was good. The end of repatriation at April, I think it started about middle of April, so now we're in middle of May. Time to bring it all the way back down, I think. I wouldn't be shocked if we have some yen strength for a while, and then sideways action for the summer. So really, we have between now and the, what is it, June 25th Fed meeting? June 26th? Right? And then what? And then I go take a public speaking class at Harvard. Really, I'm so scared. I'm so scared. In sooth, I know not why I am so sad. So anyways. So, which, you know, and now people are asking me, right, like, oh my God, the stock market dropped. Like, my wife was talking about it this morning. I'm like, I know, we talked about it a week ago. She's like, we did? No, don't you remember talking about the VIX and how the whole market's naked? And as soon as there's a pullback there, everyone's going to get out and we're going to have a reasonable drop. She's like, oh yeah, that's right. So that tells me, however, maybe if we can let this drop for a week, I don't know how long a stock market drop will be, because it's not up to me. But if it falls, ideally we fall for a week, or 10 days, or 2 weeks, or fall significantly and then kind of trickle down even further. We'll start talking about problems in China and stress in the Middle East and North Africa, blah, blah, blah. Great. And then I'll probably start buying the stock market. Because do you remember, was it last week? I said I had it's actually very fortuitous that I had some cash I wanted to put to work, but I'm waiting for a stock market decline. It's very fortuitous that my cash showed up, aka you had to get out of something else, right at the stock market all-time high, right before it dropped. Cool. Yeah, maybe Trump eats a peach, right? Yeah. So anyways, now would be a great time to let it drop, right? And then buy something. You know, but the question is, what do you want to buy, man? What do you want to buy? Everything is overbought, don't you think? Here's a thought. Maybe you can think about it as well. If we think oil prices are going to be up in 10 years, so we have a 10 to 15 year horizon. Maybe this is part of your $1 billion portfolio. But let's just say we believe, our analysis tells us, oil prices will rise within a 10-year period. By the way, what kind of evidence would even support such a thought? Yeah, well, Horace, you're about a year late on that, right? So commodities are generally up based on China stockpiling over the last few months. Well, that's over, so you got to be careful. Yeah, Richard, no investment. Richard, you wouldn't be much of a fund manager if you were charging a management fee and not investing, right? So, no. Don't give me guesses, guys. Don't tell me, you know, disruption to somebody. No, come on, dude. Give me a fact. You're a $1 billion manager. You're doing research. You have a team of quants. Dazzle me. I know what you meant, but that's not a fact. Now that's speculation. Oh, well, there might be a... No, come on. All right, how about this? The International Energy Agency predicts an increase in demand over the next 5 years of 11 million barrels a day. Meanwhile, proven reserves based on current investment levels are not expected to rise. And over the period of those 5 years, the unusual high levels of inventories are expected to decline as global GDP improves. And that we're only 12 to 18 months away from market equilibrium. But there might be a disruption in supply. I don't know. So, I did ask you 2 weeks ago to spend time on such websites. Guess what they did? They tell you stuff like this, guys. You don't have to be wicked smart. You just have to read. Right? You don't have to do the analysis. The IEA has PhDs working for you and producing reports for you. And the beautiful thing is all the other smart people are lazy. Because that's free information. Everybody should know this, yet nobody does, right? Right? Even talking heads on TV, billion-dollar hedge fund managers, they're all lazy. They're all big, fat, stupid, lazy. They spend more time, negotiating prices on their beach houses and jet planes and flying around the world and, but they're fat and lazy. You understand? So my fund has thousands of PhDs and quants working for it. They work at you're right? Right? They also work for the IEA and the EIA. They work for the, the IMF. Oh my God, I have thousands of quants working for me at the IMF. I have a huge staff at the Fed. By the way, I used to have a board member who worked at the Fed. Now I'm like, oh my God, Philip, I should bring him back on our board, right? But anyways, look, that's where the answers are, right? Right? And Peter, do you know the history of the IEA, why it's there, why it was formed? It's really interesting if you think about it. Okay, the Western world was raping and pillaging the Middle East for cheap oil. Companies like Shell and Exxon went into the Middle East, just sucked out as much oil as they possibly could, paid the sheikhs, if you will, paid the Middle Eastern countries pennies for this oil. But of course, it was all their money they invested too, but they paid them a pittance, like just a pittance, and then sucked all this cheap oil into the Western world. And guess where all this beautiful, Western wealth was created? Suddenly cities were just built, right? And this fabulous wealth was created in Europe and North America. No, it's sort of after standard, you're talking farther back. I'm talking post-World War II, right? Like the 50s and 60s and 70s, right? And so the Western world just boomed on cheap energy. And they literally paid the Middle East countries nothing, pennies. Oh, here you go. Right? And it got to the point where the Western pig dogs were raping and pillaging. It was bad, right? So those countries got together, formed OPEC to say, you can't do that to us. We're going to work together. And we're going to control the supply, not Exxon, not Shell, not anybody else, but the producers. We're going to control this. But think about it. It was so bad, OPEC had to be created to protect the oil producers because they were being raped and pillaged. So I don't blame them, right? So then the Western world's response to that was, well, let's create a cartel of our own. We'll call it IEA. So now all the IEA member countries have a strategic petroleum reserve. Have you ever heard of that? SPR? Yeah. So member countries of the IEA now have stockpiled oil. So if OPEC suddenly says, cut them off, like they did in the 70s, right? Cut them off, no more oil. Well, that there would be supplies stockpiled to try to protect themselves. Okay? So it's to balance OPEC's power. Uh-oh. So this is not plugged in? Yes, it is. So anyways, so it's sort of producer versus user, kind of balance of power. Okay? So it's very interesting. So you can look at IEA countries as like OECD countries type thing. But anyways, so that agency does a lot of reports on things like demand and supply. Very interesting. Okay? So like I said, if you want to be a genius, read the damn report. Oh, that's too hard, Wayne, forget about it. I just want to be rich. All right, well, do the work. Like I said, fall in love with the work. If that doesn't excite you, uh-oh, SpaghettiOs. Because I just talking about it excites me. And I think you can tell, right? I'm like, oh my God. The IEA and OPEC, now let me tell you the whole history, right? I can go back 100 years, day by day, telling you the history of that industry. Well, it's because I'm passionate about it, and I like to make money on it. Okay, so, Beast. Okay. So once again, I think you probably should be out on this if you're doing the weekly swing, right? The weekly swing, as you already know, would be down to here, up to there. It's highlighted yellow because that's our sell zone. Our target is the green zone, and we blew through it. Yeah, you're supposed to be out. Okay? You're supposed to be out. Now, if it's a monthly swing to you, what's your target? Did we hit it? Is there a M3 here? I don't think there is there? No. No, yeah, I'm thinking MS1. But not this week. All right, so I'm thinking 138.44. 138.44. But not this week, bro, right? You're supposed to be out. I know it sucks that you're done for the week on Wednesday, but that leaves you Thursday and Friday to golf. Hey, Daniel, I am so close to moving forward, so close, could be today. Yeah, so maybe you and I will go golfing, huh? You have a good golf course in Singapore? Oh, cool. Do you golf, Daniel? No. Hey, you're never too old to learn. All right. All right. How are pivot points calculated? Should I dive into this? Yeah, okay, I'll dive into this. All right, let's do it this way. The importance of pivot points is they show you market sentiment. How do you calculate market sentiment? Into a technical indicator. Dude, I look like a disaster. Oh man, gee whiz. Price? No, it doesn't tell you sentiment. Look at the trend. Sentiment. It tells you what people are thinking or feeling. Okay? Do the math, right? Yeah. No, I like what Ryan said. Previous, high, low, and close. But the sentiment part is the close of the last period. Okay? So let me tell you something, right? For example, low, high, close. Do you see? The closing price of the week was the same as the open of the week. So the market opened bullish, rallied like crazy all the way to Thursday. But on Friday's close, whoa, what happened to the bullishness? You see? So, if I wanted to know the average, if I wanted to know the middle of the market, I would look at the low of the week, the high of the week, divide by 2, and I would get the average, the middle. Pivot points don't do that. Pivot points look at the low of the week, the high of the week, and the close of the week, and then calculate the new pivots, incorporating the bearish close. See, it opened bullish, closed bearish. And that's significant. Okay? Look at the week before. Opened bullish, closed bullish. Look at the jump in the central. Opened bullish, closed bullish. Right? And look at this. This is the actual trade of the year, really. Right in here is the obvious buy. And then, whoop! And then it's been bullish all the way to here. And this up here, right? This little X that we're looking at, even though it's been up and up and up and up, we called this. We called this on Monday morning. Because of this drop, look for the drop, right? Because of this bearish close, look for the drop. No, James, there are two opportunities. M2 to M4 if you're a bull, M3 to M1 if you're a bear, but because of this drop to the 55, that signals double top or lower high. It signals look for the change in trend. Now you could still be a bull, but you're taking the risk now because it's significantly less bullish than before. Yes, James, right. So double top near M4 or lower high, but it's the same thing, right? So if there are still lots of bulls, you're going to get a move to here. Okay? But if most of the bulls got out, which looks like they did over here, where's the sell zone? If you're a swing trader, 147.02. Yeah, 147 even, right? 147.000. That's, see, as a bear, right? As a bear in the swing trading course, that's your sell zone. And the heads up should be, whoa, the drop to the 55. Holy smokes, eh? Right? The fact that the week closed at the open of the week. So how much, if you look at the stats, weekly stats, the pound yen didn't do anything all week. It closed at the same price as they opened. Nothing happened. That's the problem with statistics, right? You look at the stat and you're like, oh, nothing happened. This is why you got to look at risk-adjusted performance. Can you imagine a hedge fund manager saying, oh, here, look at my performance. You just look at the numbers, you're like, oh, you had a flat month. But if you look at the trades, the guy was down 10% and then made it all the way back by gambling and closed the month break even. Well, wouldn't it be nice to know that the guy was down 10% before closing at break even? Relevant information as an investor, right? So anyways, there are clue trains here, right? There are clues here. There are flags here. But what I was saying earlier, just to finish that thought, James, if you were a bull and did what you were supposed to do, if you were a bear and did what you were supposed to do, either party did not lose money, and both parties had the opportunity to make money. You're not always going to get it right, but if you trade properly, you're going to have less risk. So I don't care whether you're a bull or a bear, but I mean, look, this thing rallied 100 pips before dropping. I mean, you could have made money on that at the very least. Like actually this trade, you know what? I longed it here and I was up 100 pips. But I'm sure I told you I didn't like it. But whatever. Whatever. Forget about it. Forget about it. Yeah, forget about it. Hang on. All right, so there's the beastie. Yeah. Right on, Bubba. Right on. Okay, I guess we got to do some oil. Got to adjust your fork. Okay, to the new high. Got to adjust this one. No, I'll leave it there. Oh yeah, it's that one. One second. All right. So what does this say to you? Oh yeah, well, how to calculate them? High, low, and close divided by 3. I happen to use an indicator, an MT4 indicator, to do that for me. So get yourself some pivots. You know, and it's easy too. You just go to well, there's the market. Probably do it here. But usually I'm code based, so you just go through here and you find your pivot points in here if you want. There's all kinds of great indicators and stuff in here, and you can filter this out a little bit, get rid of scripts, get rid of expert advisors, and now you can just search through here. There's literally 1,000 different things you can add to your MT4 charts. Right? Find yourself some pivots. And the thing is, go through and look at all this stuff, find things you like. The ultra oscillator, yeah. Fibonacci. This indicator will draw Fibonacci tools such as retracements, arc, fan, expansion, blah, 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 blah. I mean, there's all kinds of interesting things in here. Right? Spend some time, get to know the tools that you use. So anyways, high, low, close divided by 3. It's super easy. Yeah, cash. Well, the stuff in the market tab usually you have to pay money for. The stuff in the other tab is free. So anyways, guys, what this looks like to me is all I need are the pivots. Right? The other stuff to me is just noise and subjective confirmation bias tools, right? I mean, I think the most important thing going on here is that we expected it to limp out around $50 a barrel, both psychologically and technically. This orange line here is where our predicted top in the pivot profit zone, which also predicts that. And we also predicted that we would be stuck in a role reversal kind of scenario because we talked about this being support on a higher time frame. Okay? The top here on Monday predicts a retracement back to the weekly central. Still hasn't happened yet, but you know, there's a lot of players in this market. But that's what we thought on Monday. We certainly thought it wouldn't go any higher. But this predicts, I mean, it doesn't have to. But what it suggests is a retracement back to the weekly central. Doesn't mean it has to do it, but it certainly says, whoa, 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 Bubba. Right? Whoa, 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 Bubba. Maybe no more buying, right? Know when to hold them, know when to fold them, right? Does this say add to your position? No, it says take profit on your position and don't add any more. It says thin the herd, Bubba, thin the herd. Okay? Now what? Well, you're going to need oil prices to go up if this comes back down. Okay, once again, how did we use our tools? The drop to the 55 predicted a lower high or double top, right? And then in the following week, this Monday morning sell zone predicted a drop to here, which is 135.80, 135.81. It might have gone, it went down to 130, wait, those are off. 135.81. I'm sorry, it went down to 135.76. That's 5 pips off. But it all started with this 55, which predicts a lower high or double top. Then that predicts a lower low. Pivots predict a stop here. And again, if you hit it early in the week, it retraces. So it might come up to 137 again, or it may drop back down. Okay? If you're still a bear, which means you need oil prices to go up, if in that case, then you're looking for a drop back down to here. Right? Up and then down off the roll reversal. You can see there's a pivot cluster above it. So you might as well include that in your analysis. Off of this low, so to speak. Okay? And if that's the case down, I'm not convinced though we're going to get oil to go back up above 50 this week, but I think it probably will. But may not. Okay? So if you believe we're on our way to $55 next week, then you would sell this rally. Okay? Well, what happens, Nikolai, is it actually has to drop lower to hit the limit orders. Okay? So think of the bid-ask spread here. Let's say everyone put their limit order and they were short. And everyone put their limit order at 135.81. Based on the bid-ask spread, what does price actually have to hit to take them out for profit? 135.77. Assuming 3 to 4 to 5 pips, right? So even though it ticked a little bit below, just remember their actual limit was exactly 135.81. Whoop, whoop. Is this random? Right? Do you think this is random? If you can see the bid-ask spread confirming where their actual limit orders were, and it wasn't 135.80, it wasn't 136.00, it was 135.81. Right? Lovely tully boom. Let's look at the peso. Hallelujah. Yeah. They're treating it like the hay high. Hey, the Mexicans are making the czar look good. So I don't know what to do now. You know what? Isn't it ridiculous? We're up $40 an ounce in a week. It's pretty good for the ego. Yeah, but Michael, I swear I said something to the effect that now that we're at the technical support, you watch, something magic's going to happen. Right? That we're here, and all of a sudden there's going to be a thing. Like what? I don't know. There's always something. And everybody on the TV gets, oh, well, it's the Comey thing. It's, it's North Korea. It's North Korea. It's something, right? Right? It's like, but I'm like, I don't know what it is. But you watch. Okay? And bear in mind, when we were up here, 3 or 4 weeks early, we had our eyes down here for the drop and then the reversal. There's always something after the fact to make it logical, intelligent. But nobody ever says that it was because that's what the market wanted. See, I think there's a lot of fat and happy cats on Wall Street that they all just work together and make money, because once you kind of understand the game, the system, right? It's like being on the inside. It's great because then you watch the news and they're like, oh, it's the Comey thing. Oh, well, he fired the FBI director. You're like, really? Really? Yeah, well, I guess the market knew that 3 weeks in advance. Yeah. Right? I mean, how funny. It's funny. They must just laugh. They're like, wow, people is stupid. Rather be a sheep than a pig. Right? I know, like, bad things happen to sheep, Michael. But pigs get slaughtered, and that's worse. Yeah. So anyways, I love it. I'm glad. Whoa, no, look, it's Comey. Great. Fantastic. Yeah, there's no way that's true, Ryan. Well, look, if you're locked up in the stock market, fine. But you know, I don't think the ultra-rich are in the stock market. I can tell you for a fact, the ultra-rich do things that you don't even know of. And they just make money. The stock market's for people saving for retirement. Does that sound like ultra high net worth individual? They're saving for retirement, right? I need $2 million to, right? I have $2 million in bonds. I'll have a monthly income of $2,200. Plus the government will give me $1,000. And I can live until I'm 80. I mean, what? Right? And then you go see an ultra high net worth individual. He's got a $20 million painting in his bathroom. You know what I mean? So, I don't know. I can't imagine that truly the ultra high net worth individuals, I mean, whatever. Whatever. See, look. Rich people own things, guys. They own assets that make money. Rich people are broke because all their cash is tied up in things they own. Right? Stock market drops 5%. How much money do you lose on your portfolio of skyscrapers this month? The market's down 5%. Are you still going to collect rent on your skyscrapers? Right? You understand that the market is up like 50% in asset prices, let's say, over the last 3 or 4 years? So if you own a portfolio of skyscrapers, just the value, the market value of that has gone up 50%. Plus you're collecting rent. I mean, come on. Stock market's down 5%. A billionaire is like, really? Wow. It's only a problem when there's blood in the street. Actually, James, you're funny. They write a check. No, they don't have cash. They don't write checks. Right? Analogy. I got a phone call a few years ago from American Express. I'm like, yeah, what's up? Like, we'd like to let you know, if you spend $500,000 more this year on your credit card than you did last year, we'll give you a lease on a Lamborghini. Yeah, you can have a Lambo for free. Just spend more money on your credit card. And I said, really? I'm like, that's interesting. What kind of Lambo is it? And they said a Gallardo. I said, forget about it. There's no way I'd drive a Gallardo. Get out of here. Who do you think I am? So anyways, you can walk in and like, I'll take that card, put it on my American Express. So anyways, Peso, Oscar, Mike. The news wasn't redonkulous or anything, was it? Wow, so actually it was a pretty good Philly Fed. We were supposed to have a decline. Look at that. Is that right? 38.8 on the Philly Fed? Dang, boy. That's so, wow. New orders, not bad. Prices, wow, prices are down. CapEx, otherwise known as capital expenditures, not bad. Interesting. Jobless claims, 240. The average is 240. Wow. Wow. Damn, that was actually some pretty good news. There's some good headlines in there today. What do you think? Dollar strength, huh? Yeah. So yeah, let's talk coincidence. So we just got all that good news. Dollar strength. The projected top for the month of May is 111.85. Right? And where did we get? 111.71. Yeah. So you just have to ask yourself, is that enough? Do you actually have to hit the top here? Because remember, this zone here is the projected zone, what I call the pivot profit zone. That euro strength is where you're supposed to stop buying euro, right in there. So now it's up to you to decide how do you want to play it, because the moving average is predicted will go down to the M4 and then back up and then back down maybe, right? Down to the 21, back up, but then failure on the top, then down to the 55, and then up and roll reversal and down. Well, Michael, we used the VIX to predict this decline in the stock market, and we did it like 10 days ago. So what do I think about VIX? Well, we totally used it. Yeah. Hang on, guys. All right, I gotta go. So peace on earth. May the pips be with you. May your profits be above average. And I'll see you tomorrow. Thank you for being on my team, and please open an account at TradersWay.com, okay? Will you do that for me, please?